Do you remember the 2008 financial crisis when the economy tanked, Lehman Brothers became a household name, absolute chaos in markets? Well, buckle up, because 2025 is giving off some uncomfortable comparisons to these major economic events that have happened previously. Trump's tariff war has experts sounding the alarm with several big recession red flags staring us straight in the face. Think shaky stocks, disappearing jobs, inflation that's got everyone sweating. Now, if you're over 35 like me, the gray hairs to prove it there, guys. You've lived through this roller coaster before. Now, I was young when the 9/11 stock crash happened and the dot-com boom crashed, and I was pretty young and not investing during the global financial crisis. But I knew it was serious. So let's break down these warning signs and figure out what they might mean for your wallet and your portfolio and your bottom line. So stick around, you don't want to miss this one. Now, let's take a quick trip back to memory lane here. Remember the good times of 2008 and the global financial crisis. The year the economy globally crashed into a wall. The GFC kicked off when the US housing market bubble popped, thanks to risky subprime mortgages, shady financial products like mortgage-backed securities, which were bundled up with all kinds of dog shit. Things started falling apart. Big players like Lehman Brothers went belly up, and it was utter chaos. Markets tanked. The US GDP dropped 4.3%, the worst since World War II. Unemployment rose to around 10%. I mean, that's crisis shit, right? The S&P 500 fell 57% from the October 2007 peak. Millions of ordinary people lost jobs, homes, savings, everything. It was an utter disaster, Armageddon level stuff. Central banks, in response, slashed rates, pumped cash into the economy, but the damage is already done, dragging the world into a deep recession that lasted for 18 months. It was a very rough ride. Now, 2025, it's looking kind of dicey. Not great. Okay, perhaps history is whispering a bit of a warning to us. I want to break down these numbers here and these key data points for you. Now, I know Trump said that the U.S. will be so tired of winning that we're all just going to be, oh my gosh, I'm so tired of winning all the time. Well, he even said markets would boom, but I think he meant markets are going to go boom, as in explode and go to zero. Anyway, all this economic uncertainty, especially with the ongoing tariff drama, is putting a real damper on everybody's mood right now. Fear is extremely high in markets. Nobody feels like they're winning right now, except maybe the bears who are shorting everything. Speaking of mood, there is this nifty thing called the NFIB Business Optimism Index. It's a mood tracker for small business owners in the USA. It gives us a sense of how confident they are about the economy and their businesses. It's based on a survey of small business owners asking them about things like, what are your hiring plans? What are your sales expectations for this quarter? Do you think it's a good time to expand your business? Stuff like this, right? Unfortunately, as you can probably guess, the index is not doing fantastic. The index dropped 2.1 points in February, marking the lowest reading since October 2024, and there was a lot of uncertainty in the lead into the elections. Now, you might just say this is all just for small businesses. It shouldn't be a big deal. We're basically at the bottom of the business cycle anyway, so kind of pessimism is understandable. We're probably going to go only up from here. However, small businesses employ half of America's workforce, provide more than 40% of the United States GDP. So if they think the economy is not doing good, you should probably listen. The manufacturing sector isn't doing super fantastic either. The ISM Purchasing Managers Index, or ISMPMI, is a widely recognized indicator of the economic health of the United States. Looking at the activity in manufacturing, it just drops to 49. Now, above 50, good, under 50, bad. Let's just put it in a very simple way. This index is based on a survey of purchasing and supply activities from executives from manufacturing companies. It gauges all kinds of different factors, such as how many new orders are they putting in, what kind of production are they doing, how many people are they employing, how many supplier deliveries are coming in, et cetera, et cetera, et cetera. So when this is below 50, it suggests that contraction is happening in the sector, thus indicating that manufacturers are facing challenges like reduced demand, supply chain disruptions, and other economic pressures, aka business is not doing fantastic. Going back to 2008, the index is mostly below 50. From 2008 to 2009, not fantastic. Now, before we get into the Fed and some other really juicy details, guys, if you are trading these markets right now, you need a good place to trade at. You got to check out BitUnix. You can trade Bitcoin, Ethereum, Solana, meme coins. They got you covered. And guess what? It doesn't matter where you live. You can use BitUnix. It's available to everybody, everywhere. It doesn't matter what country. And I know for some of you guys, you need a good option available to you locally where you can do longs and shorts on leverage. Okay? So go check it out. There's a link down below in the description right down here. You can find that and you can get signed up. No KYC, no VPN. You'll even get some sweet bonuses, $10 for signing up, 20% deposit bonus. You deposit $1,000, get $200 back, and $500 in trading bonuses. It's a pretty awesome deal. Go check it out. Limited time offer. Link down below. Okay, so let's talk about the Federal Reserve. Now, the Fed has a new favorite word here, and that's uncertainty. Now, if you do not believe me, just go rewatch Papa Powell's last speech. He said uncertainty 22 effing times. The St. Louis Federal Reserve reports that economic policy uncertainty, particularly around trade, has reached levels not seen since the 2019 US-China trade war. And that is an understatement, okay? The trade policy uncertainty index today has hit a record high, surpassing previous spikes during the pandemic and during earlier trade disputes. Fear is at its highest levels, and it's a global trade war, so it's not so surprising. In case you're wondering, the Trade Policy Uncertainty Index measures, of course, the level of uncertainty that is currently surrounding different trade policies internationally. It's calculated, of course, by analyzing all the different frequency of terms related to trade policy and related to uncertainty that we see in major newspapers. You know, I was thinking about newspapers the other day. Remember back in the day, like 15, 20 years ago, actually to buy newspaper, hold it in your hand, man, get the ink on your fingers. What an experience. My kids will never know that. Anyway, yes, Jerome Powell may have said uncertainty too many times, and because of this uncertainty, Trump's economic team faces a lot of criticism, even from their own allies. Even Elon Musk broke ranks, took aim at Trump's advisor on trade and on manufacturing. That's Peter Navarro. All of this drama is clearly being reflected in the wild uncertainty and wild crash happening recently in the market. I mean, you've probably been looking at the S&P 500. We've been talking about it here constantly. It dropped below 5,000 on Monday. I don't know what's going to be at by the time that you watch this video. We're recording a couple days in advance, but there's been chaos, okay? Pretty big drop from over 6,000 earlier this year. That's about a 20% drop from the peak, which is pretty standard for major corrections in the market. But for comparison, the S&P 500 dropped 57% during the 2008 global financial crisis. So obviously we're not down that far, but damn, I guess we're not quite to the halfway point if we go global financial crisis levels here, but that's the trick. Is this a global financial crisis that'll play out like 2008, or is this just a growth scare that'll resolve itself in a couple months when deals are made? The next red flag hits home for most of us here, the most desirable, stable employment. So softening labor market is a nightmare for many people. Recent data suggests that the United States labor market is now showing signs of softening. While job growth remains pretty positive, with 228,000 jobs added in March 2025, there are indications of weakening demand for workers. Active job postings have declined compared to 2024 levels. The March unemployment rate is still manageable, not that far off record lows essentially, but has slightly increased to 4.2% from February's 4.1%. Still super low, historically speaking, and far from the 2008 recession peak 10% unemployment level. But unless somebody hits the brakes soonish on all this madness, well, that's the direction we're heading in, unfortunately. At least that's what the market's currently fearing. According to Trump, tariffs will create jobs, but some economists disagree. According to Mark Zandi, chief economist of Moody's, this is going to cost a lot of American jobs and send unemployment spiking. This is a lose-lose situation for the world. And if Zandi is correct, that will create a lot of pain for both businesses and for workers. Think about it. Fewer jobs means less consumer spending. Less consumer spending means less profit for businesses, quite simply. And eventually, businesses will cut jobs or close altogether, and the cycle continues. Now, let's talk about the inflation monster, specifically rising inflation fears. Now, I know we talk about inflation a lot, but it's one of the key things you have to look at when trying to judge the economic situation. Even though inflation's been cooling a bit, heading towards the Fed's 2% target, oil prices are down, egg prices are down, well, some people just aren't buying it. They don't think it's going to stay that way. Tariffs are going to send it soaring. The University of Michigan says people's expectations for inflation over the next year jumped from 4.3% in February to 4.9% in March. That's the highest since late 2022, and it's been climbing fast for 3 straight months. The expectations, not the reality. Now, over at the Conference Board, they found that 12-month inflation expectations shot up from 5.8% to 6.2% in the same period of time, with consumers stressing out about sky-high prices for a variety of different things, eggs and gas and all that stuff, although this data is not the most recent, and a lot of these prices have come down very dramatically since they took the last survey, so that needs to be accounted for here. A recent study by Allianz Life showed 71% of Americans think inflation is going to get worse in the next year, up from 60% late last year. Again, This is sort of based on not where the trend's going, but where the trend has been. It's lagging data. Well, it could be a self-fulfilling prophecy to some extent too. When consumers start worrying about inflation, guess what? They cut back on spending to prepare for higher prices. This change in behavior, of course, reduces economic activity, slows down growth, and creates all kinds of problems. A cycle of fear and reduced spending can tip an economy itself into recession territory if left unchecked. You need consumer confidence to come back. If anything, these scared levels and thoughts and predictions for inflation are an indication of, if left unchecked, if unreversed, things could get worse because people are afraid. All this fear of inflation, the job uncertainty is making consumers lose confidence, which means they're going to spend less, okay? Confidence is an important measure of economic health. People need to feel that they can go out and buy that new car and that they're going to have a good job and that they have some kind of security. After all, who's going to buy the goods and services if everybody's terrified that they're going to lose their jobs and have no money in a few months? Let me tell you, it's not looking fantastic from these current predictions. The Conference Board's Consumer Confidence Index dropped 7.2 points from February to March, hitting its lowest level since January 2021. The expectations index, based on consumer short-term outlook for income, business, and labor market conditions, dropped 9.6 points to 65.2, the lowest level in 12 years. Well, the University of Michigan survey of consumers showed a reading of 57 for the month, down 11.9% from February and down 28.2% from a year ago. Consumers right now, they're not getting tired of winning like Trump promised. They're fucking terrified. They're scared of the future. They're not going to have enough money. How are we going to afford all this stuff? How am I going to afford a mortgage? How can I send my kids to school? How can we put food on the table? I'll never be able to buy the new car. No vacations for 10 years. It's a lot of numbers. But what's it all mean? Well, TLDR, people are starting to freaking panic, man. Ordinary people and businessmen alike. There's extreme pessimism and fear on the streets right now. But what are the odds of the United States going into a full-blown recession? Well, Goldman Sachs says there's currently about a 45% chance in the next 12 months, up from a previous forecast of 35%, while JP Morgan believes that the United States will enter into a recession in the latter half of 2025 as GDP contracts by 1% in the third quarter and by 0.5% in the fourth quarter, with unemployment then pushing itself up to 5.3%. JP Morgan thinks there is a 60% chance of this happening. That's a pretty big jump from their previous 40% probability, but then JP Morgan are market manipulators. You can't really trust everything that they say, okay? But interestingly, this coincides with Polymarket's 61% probability that a recession will be declared by the end of the year. Other research firms, including Barclays, Bank of America Global, RBC Capital, UBS Global, and others, okay? A lot of opinions out there that we're all kind of heading in the same direction, giving basically a pretty similar warning. Things are bad and they're going to simply keep getting worse. Is that market bottom sentiment, or is everybody right and we should all be panicking and rushing into cash while wait for the storm to pass over? Even BlackRock's Larry Fink says we are probably in a recession right now. We've probably even been in a rolling recession for the past couple of years. Stocks have done well, most people have been left behind. But there must be a silver lining here, right, Lark, right? It's not all effing bad, is it, man? Well, the silver lining is right now a lot of countries are trying to negotiate with the United States, trying to make a deal, okay? Deals will be made, and maybe, just maybe, we end up avoiding the recession. Okay, maybe it's going to be a very short one if it does happen. A lot of economic uncertainty, a lot of problems right now, a lot of fear. Now, the OECD, or the Organization for Economic Cooperation and Development, they are still projecting a global 3.1% GDP growth for 2025. Not too bad, right? Traders are also betting that the Federal Reserve is going to cut rates at least 4 times in 2025 right now. That's the current estimate. It goes up and down a little bit. It was 2 cuts 2 weeks ago. Now it's 4 cuts, so just FYI. But will 4 cuts be enough to save us, or will it be a case of too little, too late? Guess we'll find out. Nobody knows. But, well, what if it's all just going to go to hell, Lark? Shit. I guess we're becoming community members for some of these bags, guys, and we're all going to have to pivot to do an OF or got some nice feet. Maybe I could get a good job in OF. Something like that. Ecom maybe, okay? Something a little more dignified. Anyway, but seriously, did you know that Satoshi Nakamoto was also fed up with all this shady financial system bullshit that led to the 2008 financial crash? Bitcoin was born out of this. The goal, of course, by Satoshi to help ordinary people like us preserve wealth when the system goes haywire, when the system fails us, as it inevitably and consistently does. Now, with all these red flags, Bitcoin, of course, facing a real litmus test right now. Can it live up to Satoshi's vision of being something more, being a real financial lifeboat, or will it just continue trading like another damn tech stock? Just a higher beta play to the NASDAQ, kind of what it's done so far. And look, I don't have a crystal ball, but I'm also not going to bet against Bitcoin in the long term. Bitcoin will do fine. Whatever is going on in the economy right now, it'll pass. Can it get worse before it gets better? Yes. Can it be much short-lived than people think? Also yes. Okay? Be patient. Your goals are in sight. Stay focused. Don't let the fear take over. Thanks for watching.